Bro, this shit is this easy. It is this easy. Here is how I got 34 points in ES today, just using auction market theory. Look at this shit. This is the daily time frame. These are daily candles. That purple line, that's the yearly VWAP. That upper line, that's the yearly first standard deviation high. If we are bullish, we'll use this first standard deviation high as a reason to distribute higher. Otherwise, we'd be in rotation towards VWAP. Coming into the New York session, we were already somewhere in here. That would mean if we are not retracing back above, right, that should act as a resistance, which would be the yearly first standard deviation high. So my bias was bearish, right? Pretty easy. This is the 7-hour time frame, and this VWAP, that's the quarterly VWAP, right? That's the quarterly VWAP, that's quarterly first standard deviation low, that's the quarterly first standard deviation high. If we are bullish, we'll use quarterly first standard deviation low as a reason to distribute higher, right? But what does market do? It holds the mean and it is disrespecting first standard deviation low. That would mean auction is taking place lower. So in New York session, which would be this 8 a.m. candle right here, we can expect a flush down. So 7-hour, my bias is bearish. This is the 2-hour time frame, and that VWAP is the monthly VWAP. That's the monthly VWAP, that's the monthly first standard deviation high, and that's the first standard deviation low. This volume profile is the volume profile of this consolidation zone right here. If we're bullish, we'll use value area low to go higher, but if we are in bearish market, truly bearish market, we'll disrespect it and then flush towards lower prices using this as a breakout. And since my daily and 7-hour is bearish, I'm expecting to trade away from this value area low, right? This is the 30-minute time frame, and that VWAP is the weekly VWAP, right? That is this week's VWAP, and that is where we were at 9:30. So we were way outside fair value within these bands. So I was expecting a retracement towards these levels, which would be the yearly first standard deviation high or the first standard deviation of the weekly VWAP, and then flush lower. So I have to wait for a retracement to catch the shorts. Does that make sense? And what happens on market open? Boom, we flush straight towards value. This is this session VWAP, right? So if I want to be short, I would either be short from first standard deviation low or VWAP or first standard deviation high, right? So I wait until I get a beautiful reaction from one of these levels. Tries retested yearly first standard deviation high. So if I want to be bearish, it has to reject from any one of these levels. And at this point, when we have this nice bearish candle engulfing whatever the fuck you want to call it, inversion, fair value gap, whatever the fuck you want to call it, doesn't really matter, right? And I do think that's a 1 minute inversion, maybe not, but whatever you want to call it. At this point, you go to order flow and you look for a delta flip or buyer strapped or whatever the fuck. You get your confirmation and you take